Now, think about this. If you had to choose between paying an interest rate of 28% or 6%, I'm sure the answer would be obvious, right? Anyone would choose 6%. But here's the surprise. In the real world, a loan at 6% can end up costing you way more money than one at 28%. Yes, you heard that right, even if it sounds absurd. And millions of people make the wrong financial decisions because they focus only on the interest rate and forget something much more important, the amount and the time. Today, I'm going to show you how to really read a loan. This way, you'll never be fooled again by an interest rate that just seems low. To truly master and win the money game, the very first thing that you need to do is strip away all of the confusing technical jargon surrounding the word interest. Forget about the full percentages for a moment and think about money exactly like you would a car you're going to rent out for a long road trip. If you go to a rental agency, they charge you a daily fee to use the vehicle, right? Well, with banks, it's exactly the same. When you take out a loan, they're not giving you anything for free. They're renting you their money, and the interest rate is simply the price you're paying for that rental. Let's do a super simple example. If you borrow $10,000 at a 10% annual rate, that means renting that money will cost you $1,000 a year. If you truly understand that interest is the actual price you pay for a financial service, you'll stop seeing it as something abstract and start seeing the very significant and tangible impact it's going to have on your personal wallet. But here comes a really interesting and fundamental point to consider. Why exactly does the act of borrowing or renting money cost some specific people much more and others significantly less? Well, let me explain this to you super quickly. Banks don't set interest rates by rolling a random die. On the contrary, the entire financial system moves based on a single factor: risk. The more risk the bank faces that you won't pay back that money, the more expensive the rent on that money will be for you. That's why interest rates are mainly divided into 3 levels that you see every day. High-risk credit cards. These credit cards have rates that can range from 25% to 50% annually, or even much higher in some cases. And I ask myself, why are they so expensive? It's because these are defined as unsecured credit. In this case, the bank has little chance of getting its money back if you stop paying the card. If you decide to leave the country and don't pay that card, the bank, for its part, doesn't have anything physical to take from you to recover that money. Auto loans, medium risk. They have much lower rates, of course, usually between 8% and 14%. Here, the risk goes down because if you stop paying, the bank sends a tow truck and takes the vehicle away from you. They have collateral with them. Mortgage loans, very low risk. These loans have the lowest interest rates on the market, usually just a single digit. In this case, the bank knows that if you don't pay, it will keep the house, an asset that, besides, increases in value over time. The golden rule is, the greater the collateral, the lower the interest. Now, let me talk to you about something we call the fine print trap: rate versus total cost, or what in English is called APR, or TAE. In my opinion, this is where most people get deceived. And pay close attention here, because this is where I want you to open your eyes. Imagine that one bank is offering you a loan at an annual interest rate of 8%, and another is offering it at 10%. You'd automatically choose the 8%, right? Wrong, because you'd be about to make a huge mistake. Here, banks usually advertise the nominal rate. That's just the base rate for the money. What almost nobody explains to you is that a real loan includes opening fees, mandatory life insurance, unemployment insurance, and administrative costs. That's why professionals don't just look at the interest rate by itself. We look at the CAT, like I mentioned, which stands for total annual cost, Or we look at the TAE, which means the equivalent annual rate, depending on your country. This indicator combines the interest rate plus all the hidden fees into a single real percentage. A loan with an 8% rate, but with a lot of fees, can have a real CAT of 14%, making it much more expensive than the loan that offered you a clean 10%. Here's a tip for you. Always demand to see the total cost, not just the advertised rate. To wrap up, let me explain the time factor and why the lowest rate is actually tricking you. And to be honest with you, this brings us back to the paradox from the beginning. Why does a mortgage at 6% end up costing you way more than a credit card at 28%? Well, it's for a simple reason. In fact, I've been mentioning it, the time factor. If you owe $1,000 on your credit card, which has a 28% interest rate, and you pay it off in a couple of months, you'll end up paying just a few dollars in interest. On the other hand, if you take out a $200,000 mortgage at 6% interest over 30 years, buddy, here's the answer. You'll end up paying almost double the original value of the house. That's exactly what I'm telling you. Time greatly multiplies the total cost of interest. That's why a low interest rate over an endless term is the most profitable business in the world. But for the bank, not for you. Guys, understanding interest rates will make a huge difference between being a slave to the financial system or learning to use it to your advantage. So the next time you go to apply for a loan, remember this very well. Don't be dazzled by the advertised rate. First, make sure you demand to know the real total cost and thoroughly analyze the time frame very carefully. Guys, if this video has helped you see loans more clearly and you want to keep protecting your finances with truthful information explained straight to the point, subscribe to this channel. Please give it a thumbs up, turn on the notification bell, and share this content, because that way we can reach a much larger audience of people. And finally, before I say goodbye, please let me know down below what's the absolute highest interest rate a bank has ever charged you on a credit card. I'll be reading your comments, so let's start the discussion. I will see you all in the next video, guys.